Hello everyone, how's it going? I apologize, you guys can hear the fan beside me. It's kind of insane. And I want to make a video talking about a stock. Now this is one a YouTuber he hasn't hyped, he hasn't pumped, but he has talked a lot about it, especially on Blossom. The YouTuber goes by the name Bradley Talks Money. I brought up his channel right here. Now, I have nothing against Bradley. I actually really like Bradley. Me and him have had good conversations in the past. This is not a hate video, like, at all on you, and I'm very sorry if this comes off as one. I swear to God, I'm not doing it on purpose if it does come off on it. But this is the YouTube channel. Feel free to go check him out. I actually really like him. He hasn't uploaded videos in some time, which actually makes me kind of sad. He hasn't uploaded in 2 months, because that's why I was wondering, I was like, I was following him, and I just stopped, and I'm like, there you go. He hasn't uploaded for a while. Now, Brad invests in a company, 8.9%. I'm hoping you guys can see that's the very top one. It's probably very bad right now. He is down 20, or no, sorry, that's the performance today. This is Eretzia Inc. I'm sorry, I'm probably massively butchering it. There is 552 people holding it in the app, and there's 170 people watching it. So your boy there's been a ton of buying. It's the 26th most bought stock on this, the 8th most viewed, and the 7th most mentioned. Now, I have nothing against YouTubers and stuff saying what they buy, but the stock has performed awful today. It is down 23.94%. The biggest reason being their guidance is no longer massive like how it has been in the past. The diluted earning per share or diluted net is like $10, like 10 cents compared to, like, I think it was 30 something. We can go check it all right in here. And they're basically just expecting like very flat growth. The cash is down surprisingly a lot, which I'm very surprised about. Which we can see right here, like, revenue increased 13.4%. It's awesome to see revenue increase. It sucks when that doesn't turn into profit. So US revenue increased 28%. Awesome. Comprising 54% of revenue in Q1. Retail net revenue increased 13%. Awesome. Like, you love these revenues. Mid double digits, man. You love it. Net income decreased 47%. Adjusted EBITDA decreased 54.6%. Net income per share of 15 cents compared to 30 last year. So we can go down here, we can see this. They break it all down. The gross profit is down. Their gross profit was 38.9 compared to 44.3%. We're going to get back to that, don't worry. SG&A expenses increased by 27.6%. The expenses was primarily due to investments in retail wages and support office labor made in the back half of 2023, as well as distribution center projects. Cash and cash equivalents at the end totaled $58.8 million, compared to $179.4 million. Now, it can't be from the income because they made profit, but that is something that if you're investing in this, you need to look into. This is going to sound really mean. I don't care enough to, because I don't want to invest in this anyway. But if you want to look into this, that is the first thing you got to look into. And the diluted per unit was 10 cents, down 71% compared to 35 cents per share. Inventory at the end was $485 million, a 62.4% increase compared to $298.6 million at the end of Q1 2023. Remains on track for its inventory to normalize by the end of the second fiscal 2024, and expects normalized markdowns in 2024 to be no greater than pre-pandemic levels. So this just sounds like, hey, you've had massive growth. Now you're going to have this for the next while so it can catch up eventually. And this is also in the middle of a quote-unquote recession. If you watch people, for example, like the Maverick of Wall Street, oh, guys, recession's canceled because consumers just keep tapping the credit card. So, everyone has their own opinion if we're in a recession or not. I think we are, but I also got a new job and I'm getting raises every once in a while, so I'm like barely, and I have no debt too, so I'm barely feeling it. Capital cash expenditures and all that stuff. Outlook, it's just like the company expects net revenue for second quarter to be flat or slightly down compared to second quarter, on top of strong growth of 50% of last year and 75% in the sort. So right off the bat, you can see exactly why it's down so much. This was a fast-growing company that's now slowly growing. So this is basically, like, I might even title this, it's literally the Tesla of clothing. It's literally Goose, as I know how mad that makes people that own the stock feel. But think about it, because Tesla's had accelerated growth for a while, and how are they keeping that growth going right now? They are cutting down their car prices. They're getting, there's all this different stuff happening where now they're cutting down, like their inventory was rising like crazy. So they have to keep cutting the prices to keep up and keep getting that strong, revenue growth to keep going. ATZ is doing the same thing. Now, if we go to their website, because you might be like, oh, well, that's a lie. They're not cutting it down. They have a summer sale on right now, so this probably doesn't help my case very much. But if we go down, let's go to shop. So we want to go, clothing. Let's just generalize. Let's go over everything. All clothing. 3,212. Well, that's awesome. Let's go down. So right above me, basically half off. Over here, I think that's a little bit more than 50%. Over here, it's about 50%. Keep going. 188, this, and it keeps going down and down and down. And you're seeing like 50%. It's just the price of a normal waistband t-shirt at this point. Cozy Fleece Perfect hoodie, it's down 50%. Like, we can keep going. We can keep going, guys. We're going to keep going for a little bit here. Down, sale, basically 50%. 50% sale, 50% sale, 50% sale. And it's like, with respect, in a normal circumstance, at least to me, this looks like a massive waste of money. Because I've seen people wear almost this exact same thing for way cheaper than $88 or $34. Like, you can probably get this $20 somewhere if you go to like Winners or somewhere. I'll ask my wife because she knows more than I do. But sadly, she's not here. Otherwise, I'd be like, sweetie, what's your opinion on this? What's your opinion on this? And she's kind of a cheapskate like me because she loves buying clothing. I don't want to embarrass her, but there's like a shit ton of clothing like right over here off camera. And in front of me, actually. So she loves her clothing, but she buys it like in bulk on sale, and like you can get them so cheap at like Costco or other places. But like the revenue grow, like the income growth and everything has slowed down so much that now the stock's getting hit because, oh no, it's just an ordinary clothing brand. So you know what happened to Goose? Like Goose was like, oh, the revenues are insane, guys. Guys, look at this revenue growth. Look at the revenue growth. It's crazy. It's crazy. I swear. $63. And then, oh, it's just a generic clothing brand that its winter hoodie was a fad and no one's buying it anymore. And look at it. $20. You're just floating $20. And guess what? The best part is you've done this for 2 years now, just floating in the $20 range. And there's no dividend. Meaning you've basically made no profit for 2 entire years. I don't want to say that's what's about to happen, but it looked like all of this was from the massive expectation of it's like the pandemic hit, and then like it's growing. It's insane, and then now it's going right back because it's like your growth was unrealistic. It's slowing down. Deal with it. Now, Brad compares it to Lightspeed. I'm not even going to pretend I know what Lightspeed is, but looking at this, I can already tell something drastic happened at the end of 2021 where everything, like, the market fell and a lot of stuff swung and recovered. But Lightspeed has just been flat for quite a while. So, I mean, like, Bradley, I wish you luck, man. This is 8.9% of your entire portfolio, which blows my mind because I don't understand why. This and Lightspeed, if you invested, let's say at like the perfect timing, which we can tell from looking on your trades on Blossom that you didn't, um, you're still down a decent amount. You still are assuming there'll be growth and stuff. My advice, and you don't have to listen to me or anything like that, because this isn't financial advice and all that jargon. The same thing happened to Alaris. Now, something interesting to note is when they announced they lost 50% of their revenue because of a lawsuit, because of expenses, stuff like that. Oh, our payout ratio was still 60%. I did the same thing. It fell drastically, and I said, this makes no sense to me. So I bought it. It kept falling. I bought more. But the biggest difference between Alaris and yours, aside from the completely different sectors, but you were comparing it to Lightspeed, so I think that's kind of off the table when discussing this or whatever. Is Alaris is a fund that is very reliable because they buy different type of companies like private equity, common shares, Hey, here's the dividend. Here's what it is for us. It'll reset every year. So they have expected revenue coming in, but while I wait for any type of dividend growth or stock growth, I get paid 9%. Now I know already it's unsustainable. It's 60%. Guys, I've looked at. We'll literally go into this. It literally shows it. Sorry, I know we're going off topic. The actual payout ratio for Alaris for the 3 months ending March was 60%, which is within the target range of 50 to 60%. So while I wait, I get paid a dividend. And, if it doesn't go up, let's say it turns into Canadian Goose, it doesn't move for 2 years. That's still an 18.3% gain. Where, let's say, what happens, I'm going to butcher the name, Eretzia or ATZ, let's say it happens and it stays flat for the next 2 years, well, you're not seeing anything come through. So your gain is 0, or it'll be very low digits. Now, this is assuming that they just stay where they are. There's no revenue growth. As they said, Q2, we expect flat revenue growth. Because the issue when a company doesn't pay a dividend means that its management has a feeling they can keep growing. They can use the money better than giving it away to investors. But the biggest issue with that is that it also hurts their return. Because I'll be honest, going way back here in 2016, let's assume they IPO'd at like $19-ish. You're barely up, and I really wish that you would have sold up here if you owned it. It doesn't look like you did, Bradley, but I'm just saying, man, I'm not sure about this being 9% of your portfolio. Now, before people compare, make fun of me all you guys want. I'm going to hide myself. Make fun of me all you guys want. I'm worse off. Like if, let's say Canadian Net REIT cuts the dividend or something, I'm kind of screwed. But again, I'm getting paid a dividend. Plus, I can guarantee you I have way less money than Bradley does. Because looking at Bradley's portfolio, he is 8.1% Lightspeed, 7.8% TD, 6.7% Canadian National Railway, 6.1% Algonquin, 5.6% EQB, 4.3% Cash, 4.2% Enbridge, TELUS, Smart Centers, CTC, Disney, Google, like stuff that I will never own because I see them as too expensive and too mature because I want growth as of right now, but that can change in the future. I don't know, man. I would be extremely careful when buying this because as much as it looks like you're adamantly defending this on the Blossom app, just a reminder, this could, worst case scenario, turn into a goose where you've seen like literally no growth for over a year. I'm not trying to be like you should sell or anything. I'm just saying be aware this might happen because, and if you're stuck with it, will you be happy? Because it's a huge chunk of your portfolio. That's all I'm saying. Again, I love you, Bradley. I know you're not hyping or anything, but you are very adamantly defending it, which I know what it's like when a stock you're like, this doesn't make sense. The market is like massively mispricing this in. It should be going up like easily like a 2x stock in years and stuff like that. I get it, but don't let it, obsess you. Don't go like, oh, this makes no sense. I have to buy a ton more. Because that was me with Alaris and Canadian Net REIT. The Canadian Net REIT one worked out. It ran up. I sold as it went up, and then I took a like $30 loss when it hit back down. I bought in again. But be very careful because if nothing improves, like this is just going to be a very flat stock that has very minor stuff going for it forward. So just warning, I've been in the bias side of I love it, but just realize you could have a very possible Canadian Goose situation where you see almost no growth for years. Just be aware of that. That's it. Have yourself a good one. Bye.